mentioned the private ordering, that the contents of these settlements sometimes is determined by the market rather than by legal rules. I understand that, for example, one element of a settlement would be whether the director appointed by or nominated by an activist is allowed to share information with activists who put that director there in the first place. This is something that has to be negotiated. And you know, when I asked Steve earlier whether the activists are allowed to pay directors whom they put on the board. The answer was yes, it may be legal, but the institutional investors who are supposed to be the ones supporting the activist and basically empowering this activist would not allow it. So as a practical matter, this is not done. I would like to turn to you, Dan, now, to tell us a little bit about how this is done in Israel, if you will.
So normally when the activist would approach the company, there will be a real debate within the company, within the directors, as to what are the true intentions of the activist. What exactly is his plan? In many cases, it would be just an initial approach that does not entirely provides a full picture to the board as to what this activist is after. Is he just looking to be nominating a board member? Is he looking to force on the company a sale process? Is he looking for distribution of dividends or maybe a change in the business of the company or change of management? There are a lot of questions around it. And when the dialogue between the company and the activist takes place, then I think for the activists there is a real question whether they do or do not want to become board members. And that's not an obvious question, because once they become board members, they would be restricted in terms of trading, possibly. They would be exposed to inside information in a manner that would make them much more restricted. They would also become part of the group that makes decisions in the company, so they take upon themselves the liability and the fiduciary duty. And that is resolved in many cases by nominating someone who is an industry expert, someone who is independent, is not necessarily affiliated with the activist shareholder. Yet, once that member is joining the board, there would always be a kind of particular care to what is being said in board meetings, because when you have an activist sitting with you in the board, and you always doubt whether information which is being shared by directors will also be shared by this director with his appointing shareholder, is a concern, because he may be using that information for possibly litigation in the future. He may be using that information for other purposes. And the question whether that director truly shares the information with the appointing shareholder is something that you cannot verify. In settlement agreements, we often provide that the director is not allowed to share information, but as we know, these are matters that cannot be truly monitored. Then there are always questions of compensation. Is the director which is being nominated compensated by the company, just like any other director? And is it being brought to the shareholders meeting like any other director? Or is there a monetary arrangement between that director and the appointing shareholder? And that is a question of fiduciary duty, first of all. Is that director permitted to be compensated outside of the scope of the company for matters that are derived from the performance of the company? For example, in one company we had a question whether the shareholder can compensate the director for an appreciation of the stock price or possibly for distribution of dividends, which is something which is particularly pursued by that shareholder but not necessarily shared by other shareholders. So can they enter into an arrangement with particular compensation that is not going through the regular channels of approval by shareholders meeting? So that's definitely an issue, and it often comes up. I would say that when the activist nominee on the board raises issues for discussion at the board meeting, then sometimes it will be in pursuit of the particular agenda of the shareholder, but sometimes these are genuine matters that do merit a discussion, and in a way it even provides added protection to the existing directors, because matters that initially were just part of communication with the company now become a true subject of discussion on the board, with proper analysis, with proper views being expressed, and if that eventually is being voted down at the board, it at least received a proper discussion that would allow the directors subsequently to show that they've performed their duties properly. And one final note, in some cases we see that the activists are looking for a way to, I would say, to make a quick buck, whether through a specific action of either distributing dividends or pursuing a particular transactions, or sometimes by trying to force an M&A process. That of itself raises the question whether that director is looking for the short-term prospects of the company or the long-term prospects of the company. And for directors, there's often a big debate whether we should look after the short-term interests of shareholders, trying to provide them with value, whether through appreciation of the stock or through specific transactions, or whether it makes more sense to build the future of the company on the long run. And for example, the question of use of cash, does it make more sense to distribute cash to the shareholders, or should we use the cash for acquisitions that support the long-term growth of the company? So when you have activist directors sitting on the board, these differences often become much more apparent when people have opposing views as to how should the company conduct itself, and sometimes it also raises the level of fulfilling their duties. Is the board member fulfilling his duties when he tries to convince the other members to distribute dividend this quarter because he knows that this is what the nominating shareholder wants him to do, or whether by doing that he's exposing himself possibly to liability for not looking after the best interests of the company and the shareholders.
I can add to this.